I want to bring in Rett Wallace to this conversation, CEO of, why Triton? Why do I, but you know what I want to say?
Triton.
I want to say Triniton. You remember the old
Trinitron, like
Trinitron, the old Sony
TV.
That's
I'll
what
take
I want
that.
to say.
That's a good brand.
Mike Santoli is here as well. The question, of course, is when these lockups come off, what's really going to happen?
Well, so the lockup coming off is one thing. When the lockup comes off is something else as far as Lyft is concerned. In the S1, it says 180 days,
right,
and that's what's customary. They had a tiny piece of carve-out language that lets them go early when it conflicts with the blackout period. So we really have a 150-day lockup. So as far as what's going to happen, Lyft has $5 billion of sort of privately invested money in it that has an average basis of about $20.
Right.
So now we're going to see if that $5 billion has more conviction than the public market investors that bought it at 72 and are now, where are we, 53, 54 bucks. The high end of that is $47 on the private side, like the investors that invested in Lyft privately. The low end is like 23 cents. So there's a huge amount of pent-up gains in this name right now. Let's see if they come looking for liquidity.
What is your take, broadly speaking? We were talking about WeWork last week and this IPO that's coming.
Okay.
Just
Monday morning, let's keep it positive.
No, we'll try to keep it positive. But the appetite among investors, given the IPO lineage, let's just say, or vintage this past year, where does WeWork fit into that?
Well, so there's a clear bifurcation, right? Lyft was the first of the weird ones that didn't conform. Uber went right there. So now there's a bucket that has Lyft and Uber in it.
Right.
I think WeWork goes straight into that bucket.
Same bucket.
Correct.
And that bucket is what? One that's been a company that's been around for a long time.
Overfunded, overvalued.
Overvalued.
Don't you think?
And with a lot of questions about the ultimate business model success.
Correct.
Right.
So that you don't really know if it's on a path to sustainably be very profitable. I think all those things probably apply.
The other thing that's interesting about WeWork is it's a little bit like the ride-sharing companies where you can focus on the growth or you can focus on the profitability. If you focus on the growth, you might relax. If you focus on profitability, you have a heart attack. Right, so it's not clear what the viability is in the long term, which is why, even with respect to Uber, I think the long-term investment catalyst hasn't revealed itself, which is why you still don't know what the right price is for this.
Okay, but flip this around. My other question to you, Mike Santoli, is given the volatility in the market, just broadly speaking, how IPOs, and there are others that are going to come this September, let's take WeWork out of that, but you got Postmates, you got Peloton, you got the whole list.
Right.
What happens?
The market has done a pretty decent job, I think, of being pretty discerning about what seems to work, what businesses they really want to own and reward. Anything that seems closer to pure software has worked really well. Right, CrowdStrike, even Pinterest, arguably, using software to do really hard, real-world stuff like ride-sharing, like delivery, even like kind of the boxed consumer good stuff hasn't necessarily worked that well. So I think you might see the same separation.
Right.
Yeah, and it's just, we're not clear that it really has those network effects and all the magic of software, scaling that goes into a pure tech business. So I think that's what you're going to see, probably that same separation. There were two concerns 6 months ago. One was, it's going to be a bubble. Everyone's going to go crazy, and the market's going to fly to unsustainable levels because of this excitement about IPO.
Hasn't happened.
Has not happened. Yeah. The second one was the market's going to get swamped with supply. That also hasn't really happened, although at the margins, maybe that's what we're seeing.
So in tech land, one of the things that's interesting, there have been 18 deals, if you include Slack, and everything has worked except for non-U.S. companies, like especially the Chinese companies, and rideshare. Everything else basically works. Even these retail names like Revolve kind of worked. Real traded now below its IPO price in the recent sell-off. But in general, I think that, WeWork may do what Uber didn't do, which is close the market, but maybe not, since you have the clear bifurcation. So if Cloudflare
when you say close the market, what do you mean?
Well, like,
you think this is the end?
Meaning that it wasn't clear if the IPO window was going to stay as open as it had been. I think, we joked about making hay while the sun shines, right? Like there was a run on the door. And so we'll see if that keeps up. Now you have WeWork on the one hand, which probably won't work, but at least you have a narrative for why that doesn't matter. And you have Cloudflare, which probably will work, but if it doesn't, we'll know that there's trouble.
WeWork won't work? That's a good headline.
It could not work.
Yeah. While we have you, we were talking about SoftBank. I don't know if you saw this news earlier today.
About the employees?
About the Vision Fund, about employees getting loans to take stakes in this next Vision Fund.
Yeah.
What's your take on that?
I mean,
is
it's a big fund. You got to get money where you can.
But a reasonable thing to do, a ridiculous thing to do, a high sign on the market?
I think that people are used to seeing, investors are used to seeing the GP have real skin in the game.
Right.
Well, the guys that are doing the work now on these deals have real skin in the game. So one of the things we joke about with WeWork, right? Like 400 pages of disclosure. You can't make head or tail of it. It's very difficult to tell if the company makes sense based on that. The SoftBank guys have seen the real numbers.
Right.
And they're, not dumb guys, right? So with more skin in the game, it'll get them focused also, I think, on the downside. When you borrowed money to invest in these funds rather than just having sort of paper upside, get your mind focused. I think it's probably good for the other investors.
Okay, so taking the positive view of that. Rett, thank you.
Early in the week.
Nice to see you. Mike Santoli, thank you.